Next is Caxton, right? So this one is founded in the 1980s by a guy called Terry Moolman, Noel Coburn, his sidekick. And they've got themselves pretty much front and center in the printing game. So they've focused on magazines and on printing newspapers for other people, as well as general printing. They recently bought a business from Nampak, doubling down in that space. The reported market capitalization of this one is 8.2 billion rand. But to some extent, you perhaps ought to include the preference shares, which Coburn and Moolman own. That's, I think, of roughly equivalent value. In any event, price-to-earnings ratio of the ordinaries is 20.13. Dividend yield, they have been consistent dividend distributors. 2.86 is what the system says. However, Devin, you do just get a sense that this is kind of old media, right? I mean, I'm being slightly unfair, but print feels a little bit like a rearguard action.
It is. We're seeing it, and we're seeing Caxton try to start to reinvent themselves and move away from reliance purely on print. So there is a lot of focus on digital media.
Yeah.
I don't think the monetization is quite coming through the way the shareholders would want yet. But you mentioned an acquisition that was quite interesting on the packaging and labeling from Nampak. That's added very nicely to earnings of the company. So they're starting to diversify more. But the problem with print companies is that there's a lot of potential headwinds, particularly in the economic environment we are at the moment, that are just completely out of their control. Consumer spend, the rand, they're importing a lot of things. So, yeah, it's a tough old place to be at the moment.
Because magazines still do relatively well because it's quite a niche market and you can be quite innovative with your printing technology. The printing of newspapers for all of the others, like the Independent Group and Times Media, must be a tricky thing because one wonders about the numbers and the sales. But yes, the cartons and labels, you like that deal that they did with Nampak. It's going to be earnings enhancing.
Correct. I mean, I think we saw 5 months of those earnings coming into the last results, and there was an immediate impact. So I do like it. I think they've got to find a way to monetize digital effectively, because that is hard to make people pay for digital.
Yeah, but their digital initiatives have been relatively small, like taking a stake in MoneyWeb and that kind of thing.
Yeah.
Okay, hot or not? You can say the share price is a bit all over the show, not all that liquid.
It's had a good year. It's actually had a very good year. I mean, almost 50% up. So, you know, based on probably a slightly stretched valuation for the industry it plays in, I'm not hot on it.
Okay, I'm going to go with not hot too, although I do feel a little bit guilty about that, as you say, seeing as how well it has done. We've been calling it, and it's probably that most recent acquisition that has spired things up.